Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod. Political forecaster Nate Silver, the FiveThirtyEight founder, has written a new book on betting and political prognostication. He says be wary of polls this election.
The real margin of error is pretty wide. If it's Harris +2 in Pennsylvania on Election Day, that's still a highly uncertain outcome, for example.
And Social Security turns 89. The administration's commissioner, Martin O'Malley, on keeping it going for years to come.
Congress has reduced Social Security staffing to a 50-year low, even as the number of customers we serve climbs every day to a new record high.
Plus, the Department of Justice considering a breakup of Google parent Alphabet, and activist investor Elliott Management gearing up for another proxy fight in the skies.
Seemed to be a great idea.
Do you like mom mentality? Sure, fly Southwest.
It's Wednesday, August 14th. Squawk Pod begins right now.
Stand Andrew by in 3, 2, 1. Cue Andrew.
Good morning and welcome to Squawk Box right here on CNBC. We're live at the NASDAQ market site in Times Square. I'm Andrew Ross Sorkin along with Melissa Lee. Joe and Becky are off today, but hanging out, and thank you again.
Great to be here. We are watching shares of Google this morning, or we should say Alphabet. They slipped in after hours trading, showing some pressure this morning after a Bloomberg report said the U.S. Department of Justice is considering pushing to break up the company. That follows a court ruling last week that found Alphabet monopolized the online search market. If it pushes ahead with a breakup plan, potential targets for divestment include the Android operating system and Google's Chrome web browser. Other options being considered include forcing Google to share more data with competitors and measures to prevent it from gaining an unfair advantage in AI products. The report says the government will likely seek to block the type of exclusive contracts that were at the center of its case against Google. Google has said it will appeal last week's court ruling, and this, of course, would be the first effort by the U.S. government to actually break apart a company since its efforts to break apart Microsoft back in
Well, so I think there's a couple of questions about along what lines are you ultimately broken up,
Right.
and then these behavioral remedies which say you can't effectively buy your way onto an iPhone, for example.
Which is what it did right with Apple. It spent
Right.
$20 billion.
But at the same time, that also creates its own damages to a company like an Apple, actually. Right, so I would argue Apple has the right, or you would think would have the right, to sell its screen space the way CNBC would have the right to sell its screen space if it so chose.
Sure.
But if all of a sudden you say, well, actually, this one company is not allowed to buy the screen space,
it would be
very
allowed,
complicated.
but the question is it too difficult for you as the owner of the phone and the user of the phone? Is it too onerous for you to switch?
Correct, but then that's a question. I mean, then you could decide if you don't like the way Apple has approached this and made the switch easier or not. That's a different issue.
That was at the heart of the Microsoft case, right?
It was.
The Windows operating system.
But
Is it bundled?
I happen to believe it's made it easier. I also happen to think it's yesterday's war. In an age where Perplexity and Bing may actually turn out to be something, and OpenAI and everything else, the whole idea that we're fighting over. And that was, by the way, interesting, too, in Microsoft's case. That was also a bit of yesterday's war, if you will.
That is true. If you think, though, that somehow Google has an advantage, and this may be the Department of Justice's stance and not the market stance, and I think that's the distinction here, that because of its dominance in search right now, because of all these exclusive agreements, et cetera, it has a leg up in dominating AI search.
Right.
The market certainly doesn't believe that, though, as you mentioned.
Meantime, Google announcing yesterday some new AI features, talking about AI, that are coming to Android devices, including the Gemini AI assistant. This goes exactly to what you were just talking about. The feature is allowing users to bring up Gemini's overlay on top of other apps to ask questions about what's on the screen. The company gave the example of a user looking at a photo of a concert list and then asking Gemini to see if their calendar is free. Google also announcing its latest line of Pixel smartphones, including a $999 Pro model that comes with a free year subscription to Gemini's advanced AI features. They unveiled the Pixel 3 Watch 3 as well. It's got a larger screen, improved integration with other Google products, including its Nest cameras and doorbell feeds, Google TV remotes, and offline Google Maps. That's the thing I always like, offline Google Maps.
Oh, yeah.
Because when you get stuck in some place where you can't get the map,
No cell reception.
Right.
Right.
That is actually a huge value. But by the way, the other piece of this is, so on the Android phone, in this new AI universe, you'll talk to the phone and it'll be Gemini powering it. And on the Apple phone, it'll be Siri powering it. And eventually, all of these things will either come together or be complete. Either there's going to be some kind of big split on how all these things work, or they're going to all be sort of integrated with each other. But otherwise, they wouldn't work. If you said, oh, you can't use Gemini, or how could you, I'm just not sure how this is all, because I think the future of this really is just talking to your phone.
Oh, yeah.
Like that's
manually typing something in.
And by the way, that's going to end, I think it'll ultimately end a lot of the whole app economy as well in its own interesting way.
How?
Because the truth is, you won't even know where you're going to
Oh, I see.
You're going to say to it.
Consciously saying, I'm going to the, but I think for an Uber and a Lyft, you would know where you're going. Are you just going to say, I want to ride?
You're just going to say, I need to go home, find me the cheapest price home.
Oh,
and,
I see.
And then your Siri agent or your Gemini agent is going to go ping Uber, it's going to go ping Lyft, it's going to ping 5 things, the taxi company. You won't even know where you're getting the stuff from. It actually could be very interesting how it affects brands like that, especially middlemen brands, if you will.
That's interesting. The United Auto Workers Union filing charges with the National Labor Relations Board against Donald Trump and Elon Musk. The UAW argues the two tried to threaten and intimidate workers during their conversation on X Monday night. Here's part of the exchange about workers going on strike.
You're the greatest cutter. I mean, I look at what you do. You walk in and you just say, you want to quit? They go on strike. I won't mention the name of the company, but they go on strike and you say, that's okay, you're all gone.
The UAW says federal law prevents workers from being fired for going on strike and adds threatening job loss is illegal under the National Labor Relations Act. In a statement, UAW President Shawn Fain says in part, both Trump and Musk want working class people to sit down and shut up, and they laugh about it openly. It's disgusting, illegal, and totally predictable coming from these two clowns. The UAW has endorsed Kamala Harris in the race for the White House.
And then there's this. Let's talk activism. Elliott Management saying it's going to launch a proxy fight at Southwest Airlines. It intends to nominate, it says, 10 directors to the company's 15-person board. It follows what has been weeks of back and forth between the airline and the activist investor. Elliott saying it plans to call a special meeting. And this would be rather than waiting for the company's annual shareholder meeting. The last Southwest shareholder meeting took place back in May, and Elliott disclosed its investment in June, called for the board to replace the company's CEO, Bob Jordan, and the chairman, Gary Kelly. Southwest rebuffed those requests last month, though. You might remember that Southwest announced what is the biggest change in its business model in more than 50 years, including the end of its open seating model and the introduction of premium seating options. Southwest planning to hold an investor day next month, so a fight is upon us.
I mean, 10 out of 15 board seats.
Yep. The point is they're going to get some.
They'll get some. Yeah.
They're going to get some. And I'm happy that they made the move about the open seating.
Whoever thought that was a good idea, I mean.
For a while, it seemed to be a great idea.
Do you like mom mentality? Sure, fly Southwest. I mean, that's not,
I don't know.
Not a slogan.
I don't know. Folks who were out there, I think, did love it, though, for whatever reason.
I guess so.
Next on Squawk Pod, securing Social Security, best practices for your retirement. And is there enough of the money to go around? Social Security Commissioner Martin O'Malley on the 89th anniversary of the landmark program.
What you call a cliff, what I would call a 17% reduction in benefits, was actually pushed off another year into 2035 from 2034 due to better than expected job creation.
Welcome back to Squawk Pod from CNBC. Today with Andrew Ross Sorkin and Melissa Lee. Here's Melissa.
Social Security is a key economic issue that is top of mind for U.S. voters. New surveys show while most Americans are worried about future funding of the government program, many still plan to rely on those benefits as a major source of income in retirement. Our senior personal finance correspondent, Sharon Epperson, joins us now with the findings. Good morning, Sharon.
Good morning, Melissa. You know, it's one of those rare issues that unites many Americans, regardless of their political party affiliation. A new CNBC poll finds the majority of registered voters, 69%, rank Social Security as one of the top issues or very important in determining who they will vote for in the upcoming U.S. presidential election. That's according to the latest CNBC All America Economic Survey. Social Security reform is also a top concern, according to a separate survey from the Nationwide Retirement Institute. The majority of respondents, again 69%, say a candidate's stance on the topic would be a major factor in their vote. Now, without action from Congress, the trust fund that pays Social Security retirement benefits is due to run out in 2033. And at that time, only 79% of benefits will be payable. Nearly 3/4 of adults in the nationwide poll, 72%, worry that Social Security system will run out of funding in their lifetime. Millennials and Gen Xers are significantly more likely than Gen Z and Boomers to say they worry about the Social Security program running out of money. And still, many adults plan to rely on Social Security for their main source of retirement income. 30% say they think Social Security alone will provide enough income for them to live comfortably throughout their retirement. That's according to a new survey by NerdWallet. And nearly 1/3, 31% in that survey, say they do not and will not have a retirement account to draw from when they leave the workforce. You can find a lot more about this at CNBC.com. Read more about the survey results and how to maximize your Social Security benefits. Melissa?
It almost seems like there's a disconnect because most people are planning on relying on Social Security, but many don't expect it to be there. So I wonder if it breaks down according to age group.
Well, it's very interesting because a lot of older people are concerned about Social Security. What are the politicians' stance on Social Security? But it's millennials and it's Gen Xers even that are thinking that they're going to be relying on Social Security, and it's a very strange dynamic in these surveys the way that played out.
Also, the notion that people are afraid of Social Security reform. I mean, reform has to happen if the fund is going to run out. And so, what are some of the reform possibilities that have been floated?
Well, there are a lot of different reform possibilities that have been floated, but you can't count on that, right, for your retirement. And so what I think it's really important for people to do is to figure out now what it could be. It may not be 100%. We said 79% of the benefits, but at least get that number. And people don't understand that it's not 65 for most of us that we're going to get those benefits. It's 66 or 67. If you're born after 1960, your full retirement age for Social Security is 67. So first of all, you're going to wait until that time, or if you claim early, get a reduced benefit. And if you wait even later, up to the age of 70, you could get 8% more each year for what your benefit could be from your full retirement age to that age of 70. So you want to kind of wait longer if you can and get that. Go to SSA.gov. It's not hard to just go in there and figure out what the estimate is from 62 to 70, depending on what year you take it, and then coordinate those benefits with whatever. Hopefully you do have other retirement savings, and you can figure out how much you're going to have to rely on from that and how much you can rely on that's guaranteed for the rest of your life from Social Security.
Good advice. Sharon, thank you.
Our next guest runs the Social Security Administration. A new report highlighting a record backlog of open cases his workers are trying to handle, and so much more. I want to welcome Social Security Commissioner Martin O'Malley. Today marks 89 years since the agency was founded. Good morning to you.
Hey, Andrew, how are you? Thanks a lot for having me.
We appreciate you being here. 89 years in. Of course, I think the big question, or the cloud that hangs over the whole idea of Social Security, is 89 years from now, whether it'll actually be still here.
Yeah, Social Security is a remarkably ingenious and at its core an elegantly simple program. It is a pay-as-you-go program, and as long as Americans are working, Social Security will be able to pay those benefits. And while there's been a lot of talk about the so-called, the depletion event, the benefit shortfall in 2035, there's another crisis that's already here. And that is due to the fact that Congress has reduced Social Security staffing to a 50-year low, Andrew, even as the number of customers we serve climbs every day to a new record high. So we're doing a lot of good things on the anniversary of this 89th anniversary, but we have huge challenges and a lot of really good people, though, tackling them head on.
So, but just speak to this cliff, this 2035. I'm calling it a cliff. It sounds like you're saying that as long as people are working, there's going to be money for this. But when you look at the math, it doesn't necessarily reflect that.
Yeah, the cliff, so-called, would be a 17% reduction in benefits if Congress doesn't act as they have before in order to make the adjustments to avoid that. There was some good news that happened just a couple months ago, and that is what you call a cliff, what I would call a 17% reduction in benefits, was actually pushed off another year into 2035 from 2034 due to better than expected job creation and also wages that are rising not just for the top 6% of Americans, but all across the board. So that was a little bit of positive news. But your point is absolutely true. Congress needs to act in order to avoid that shortfall because half of seniors living alone live entirely on Social Security. Right. So this is a big policy question that needs to be tackled by the policymakers. In the meantime, we have a customer service crisis here and now, and we are tackling that. But Congress needs to do a better job of putting adequate staffing in place at Social Security.
I want to talk about the staffing, but I have a larger sort of policy question, and it's about the compact that Social Security has with the American public. For many years, there's been a debate about whether Social Security should be means tested and whether you could actually extend the longevity of Social Security if, in fact, it was means tested. We've had folks like Ken Langone, who have made an enormous amount of money over the years, say, you know what, I don't need my Social Security check. There are other people who say, you know what, I put the money in, I expect to get the money out. What do you think?
Yeah, well, I've met Mr. Langone, and he should feel free to send his money back and we'll put it in the trust fund. One of the things that makes Social Security in a time of deep division and polarization in our country so remarkable is that 80% of Americans believe it, regardless of their political affiliation, believe that Social Security should be strengthened and should be extended and indeed even, and benefits should be better than they are. Right now, Andrew, there is already in the formula a way of making sure that those that are in the lowest earning quintiles of the American public actually receive a better benefit than those at the top. And I'm sure that there are policy considerations that people in Congress will have about those benefits, but the truth of the matter is that the fix to Social Security and the 17% shortfall can be pretty straightforward. If people like Mr. Langone would continue to pay into Social Security, instead of being done with their Social Security obligations in the beginning of the year, that would greatly extend the strength of Social Security. In other words, right now, Andrew, all of us pay up to $168,600 of our income. But after that, no dollar ever has to pay anything into Social Security. So that means people like Mr. Langone or Warren Buffett stop paying into Social Security within the first 30 seconds of the new year, while most of us pay for the entire year. So, and there are proposals out there.
It's a tax increase no matter how you put it, whether you increase the amount of money they put in the future or the amount of money that they don't get out in the future. It's really a question of how you think about it, perhaps.
Well, it's also the math, and we have great actuaries. I mean, if you look at, for example, if, Ken Langone and Warren Buffett did not receive a Social Security benefit, that would not have anywhere near the impact in terms of the actual math and the support for the program that actually extending their payments into Social Security would for all of their income. And there are proposals out there to do that. The actuarial math is there. What's not there yet is the political will to tackle a challenging issue like this. But everything has its season and everything has its time. And I believe from my conversations with lots of people on both sides of the aisle on Capitol Hill is that there's the will to actually examine this and extend it for many, many years to come.
Well, let's say, on the 89th anniversary of Social Security, how would you reimagine this program? Because right now it is structured as a tax. So there is no expectation necessarily that a young person today paying into Social Security through their FICA taxes will get that money back or will get all of the money they put into the program back. Should we look at it more like, I don't want to say an investment fund, but something like that where there is some sort of understanding that you will get that money back as opposed to paying it in as a tax?
Well, when I was in college, all of us said it wouldn't be there for us either, but it is because of the way the program is structured. There have been some policy proposals to talk about, on an arbitrage, and the policy questions are things that people in Congress will have to resolve. From my perspective, and looking at the 89-year history of this program, what makes it so stable is also the thing that makes it so popular, that people pay in and that there is a benefit that comes back. And that benefit will be there for young people as well. But Congress needs to make actuarial adjustments from time to time, because the last time they did it was 1982. And in hindsight, what they did was really to give the wealthiest people a break on what they pay into Social Security. And that's honestly what advanced what you called the cliff, what I would call the depletion event. That's what advanced it sooner rather than later. But it can be fixed. It's a pretty straightforward fix. And there are other things like the one you mentioned that some people on Capitol Hill are interested in exploring as well.
Martin O'Malley, Social Security Commissioner, we appreciate you joining us this morning on
Thank you.
This 89th anniversary. Appreciate it. Thank you.
Tease will be next.
Coming up, political prognosticator and career bettor Nate Silver. He founded FiveThirtyEight, and now he's out with a new book, How He Sees the World in Two Groups and How Everyone's Betting on Everything.
The Village is like the establishment. It's like the New York Times and Harvard, East Coast establishment. The River is a world of calculated risk-taking, Wall Street, Silicon Valley, Las Vegas, basically. But you see these worlds clashing.
We'll be right back. You're listening to Squawk Pod from CNBC. Prognosticator Nate Silver first became a known political quantity in 2008 when his election model, FiveThirtyEight.com, named for the total number of electoral votes, correctly predicted the victory of former President Barack Obama. That year, Silver accurately called the likely electoral outcome of all but one state. 4 years later, he had a perfect record. But then came 2016, and in an election year that will be forever remembered for just how wrong many pollsters were, Silver gave Hillary Clinton a 71% chance of victory over Donald Trump. He departed FiveThirtyEight last year. It had been acquired by Disney some years back. But Silver has retained ownership of the electoral model, and he's now publishing currently on Substack. He's out with a new book that inverts a bit of the magic of prediction and probabilities with a deep look at risk-taking and who's good at it in a number of fields: gambling, sports, media, and yes, even electoral politics. Silver joined Andrew Ross Sorkin and Melissa Lee on our Squawk set today.
Should we talk about politics first before anything else, since that seems to be the issue du jour? From what you can tell, do you have a prognostication if this election were called tomorrow?
So we have a forecast for November, and a lot of things can change, and there's more uncertainty in November. We have it basically as a toss-up, 55% Harris, 45% Trump. A poker player might care about the 55 versus the 45, but like it's anybody's race.
And what do you think could change between now and then?
She's had tremendous momentum since she was appointed as a Democratic candidate. With the convention coming up, usually you get a boost in the polls from that as well. September, though, was a different story. You have the debate potentially. You have higher expectations with her as the front runner. So yeah, today she looked pretty good, but we understand there's some headwinds. Our model accounts for the economy. We don't know how that's going to be in November, so that's why it's still a close race.
When you think about the impact of debates historically, I mean, we just saw how a debate has had a huge impact.
Yeah.
But how, I mean, barring a candidate stepping out of the race after a debate, how important are they? Because we might have one, we might have three.
I mean, you know, June was an outlier-sized impact from a debate. Remember, these races come down to like 1 point in Wisconsin, Michigan, Pennsylvania, Georgia. So like people might say it's only a 1 point swing, but like that could be decisive given how close American elections are these days.
We were also talking about how some of the stats back in 2016, 2020 showed that the former President Trump's numbers were almost always discounted or undercounted. And
For sure.
How much we should be thinking about that in the calculus?
Yeah, look, the real margin of error on polling, given the uncertainty about who we actually sample in polls, might be 3 or 4 or 5 points in either direction. I think you can't predict the bias very easily. You could actually have polls underweighting Harris potentially or underweighting Trump, but the real margin of error is pretty wide. If it's Harris +2 in Pennsylvania on election day, that's still a highly uncertain outcome, for example.
Do you think, so reading this book, it seems to me that your brain is thinking about trade-offs always. That everything is a trade-off, everything is a risk. Do you put your whole world and life into sort of percentages?
No, not like whether I'm going to get Chinese food on a Tuesday night or something like that, right? But like big decisions, like career decisions, I think it's important to think in terms of expected value terms or financial investing. Invest in index funds, right? That has high expected value relative to keeping it in cash, for example. But no, I'm not super calculating about fun everyday stuff, more the big picture stuff.
One of the things you talk about, it's sort of a framing in the book, is this idea of what you call the river and the village. And the river is not a poker term in this context, I don't believe.
No.
But the river is a poker term.
I didn't know
the
that.
last
I know
card
the
in
river
Texas
in your
Hold'em.
book.
Right,
But
yeah.
So, explain that for those who have yet to read a great review of your book.
Cool. The village is like the establishment. It's like the New York Times and Harvard, East Coast establishment. The river is the world of calculated risk-taking. So, Wall Street, Silicon Valley, Las Vegas, basically. I'm a Riverian myself. That's a term I use. I played poker professionally when I was in my 20s, and that was kind of the inspiration for everything else. But you see these worlds clashing. Bill Ackman versus the presidents of Harvard and MIT and Penn is where you see this hypothetical landscape playing out in the real world.
And I mean, Bill Ackman, I assume, is somebody in the river in your world.
He's in the river for sure.
Okay, but is Harvard in the river or is Harvard in the village?
Harvard's the village. Yeah, Harvard's
But
the definition of the village.
Also.
I know it gets a little complicated. It's all
very overlapping.
It's all elites. We should realize this is all the 1%.
Right.
It's a clash within the 1% of people. Most people don't care about this stuff as much, but yeah, it's a rivalry for intellectual supremacy, I suppose.
And who do you think is winning?
Financially, the river is winning, I think. I mean, look at Silicon Valley. It does very well financially. Finance and tech become more and more a part of the economy every year. Las Vegas is growing. Gambling's becoming bigger. So
everything these days is becoming gamified, right? You can bet on anything in the whole world, any sort of outcome, whether, what color Gatorade is going to be poured on the winning team, all that stuff. And so in that scenario for society, does the river become more dominant?
Yeah,
as society as a whole, embraces risk-taking.
It might not be great either. It might be more of a winner-take-all economy where if you have high agency and are good at making calculations, you do very, very well for yourself. But I worry about. I'm not a big, I'm not Elizabeth Warren, but I worry about the most powerful 0.0001% becoming more and more powerful for sure.
What do you think more broadly about people betting, for example, on an election? So you can do it, abroad. You can't do it here.
So I advise a prediction markets company. I should disclose that. But in general, I'm in favor of putting money on the line to, cut down on the BS component potentially. And also, why not? People are already betting on election outcomes anyway, in terms of how it affects equities and various futures and things like that. So why not have a direct instrument and not an indirect proxy?
But do you think there should be instruments for everything? Bet on what we're going to talk about on Squawk Box this morning?
There are instruments for
everything.
There
are, yeah.
No, but there are and there aren't, right? And some of it's regulated and some of it's not.
Again, it's all implicitly priced into equities and and interest rates and things anyway. So why not let you bet directly would be my view.
What is the one thing you'd like to be able to bet on that you can't directly?
Elections, there is a lot of political risk that affects markets profoundly, right? In the U.S., there are restrictions on betting on elections, for example, but people bet through proxies, and so again, to me, it's there's nothing wrong with betting on elections. If you can bet on a football game, why not bet on the presidential election?
I feel like you don't like this whole betting thing.
No, I do. I just don't know what the implication is. And unlike sports, I understand. Politics, I also think. Well, let me ask one last piece.
Yeah.
Inside information. So that to me is the hardest part about all of this, because once you get into sort of certain types of things, there can be a true information advantage over others.
That's fair, but that's also true in the equities market, and it's true in sports, right? If you were an NFL reporter for ESPN, betting on the NFL draft, you probably know a few things about the draft, and so it's not I wouldn't cordon off political betting as being in a special case relative to equities, sports, everything else.
Okay. Nate Silver, the book is called On the Edge. You'll learn a lot about risk-taking and everything else. We really appreciate you being here this morning.
Thank you, guys.
Congratulations. Got a big thank you to Melissa Lee.
Pleasure.
For pleasure, you say, with such a bright smile.
See you tonight at 5.
We'll see you at 5.
And that's the pod for today. Thank you to you for listening. Squawk Box is hosted by Joe Kernan, Becky Quick, and Andrew Ross Sorkin. Tune in weekday mornings on CNBC at 6 Eastern. Get the best of our TV show right into your ears when you follow Squawk Pod wherever you get your podcasts. And do me a favor, if you've been listening for a while and you like what you hear, please rate or write a brief review for Squawk Pod on Apple Podcasts. That really does help other listeners discover what we do. That's it. We'll meet you back here tomorrow.
We are clear. Thanks, guys.